This is the time to buy, not be worried about the correction. Corrections gives you an opportunity. So we've seen quite a lot of excitement in gold and silver markets in the last few days. Friday, we had one of these quite violent, but I would say totally normal correction in a bull market and a bull market which has moved very fast. People have to remember that. Gold is up 86% since January 2025, and silver is up 155%. You have to bear that in mind when you look at these corrections, because both gold and silver are up massively in the last year. Now, just look at, for example, the Standard & Poor's against gold. If you look at that chart, gold is just bottomed against the Standard & Poor's index and has just turned up and broken now the downtrend and is in a clear uptrend. And that uptrend is a multi-annual uptrend. So we're going to see paper market losing massively against real markets or real commodities like gold and silver. I expect this to last many years, 5 years, 10 years, maybe longer. It's a new monetary era, and that will lead to the end of the present currencies as we know them. And of course, it will also lead to the end of the financial system as we know it. It's not going to totally finish, of course, but it will be totally different in a few years' time, be restructured, because banks will have problems and many banks will fail. Sovereign bond markets will also collapse. Interest rates will go up to percentages that we saw in the 1970s, which is high teens, 20%, maybe even higher, and there'll be high inflation. Let's look at the fundamentals of the actual precious metals. As I pointed out at the beginning, the precious metals correction that we've seen now is a totally normal correction. And obviously the investors that have bought in the last couple of weeks, they're slightly down now, but gold, for example, is actually unchanged on the year, while silver is a bit down on the year, just marginally.
According to Egon von Greyerz, the recent drop in gold and silver is not a warning sign. It's an opportunity. After explosive gains, gold up roughly 86% and silver up around 155% since January 2025, a sharp correction may look alarming. But in Egon's view, this is exactly how powerful bull markets behave. And he warns, one day, there may be no offer, only a bid.
So the move is so fast that we forget the price just a few weeks ago. But remember what I'm saying here, that is that gold and silver are in an era where they will go up by multiples from here. And, obviously measuring it in paper currency like dollars or euros or yen doesn't give the true picture. That is not the real appreciation of the precious metals. The real one is if you measure it in house prices or in cows or chickens, but nobody does. It's so convenient to use dollars. But investors should really not look at how much money they're making in dollars or how many dollars of metals they have. They should look at instead how much gold they own and how much silver they own and measure that in ounces or kilos or grams if you want. And that's a true measure rather than looking at a paper price, which is actually meaningless when the currency is being debased by the day. Now, we should have a look at the exchanges where actually silver and gold are traded. COMEX in New York is a paper market. It's a fake market, or a false market at least, and their prices are being manipulated by big bullion banks and by hedge funds. Let's take, for example, the last drop that we saw on the 30th of December. This is the massive falls in gold and silver, and there are normally circuit breakers that stop the fall and freeze the market for 10 minutes for the market to recover. But the hedge funds have found a manipulative way of really cutting out these circuit breakers so they can set prices and price limits that circumvent the circuit breakers. And that's what they did on Friday. So we never saw a 10-minute stop in the metals markets on Friday. Instead, we saw a 5-second stop that is hardly noticed. And this is the way that hedge funds can actually circumvent the circuit breakers and continue trading throughout the day and continue selling, which really is totally against the spirit of how the circuit breakers should work. But of course, hedge funds are more clever than whoever sets up the system. So if we look at COMEX now, there is a massive shortage of both gold and silver and massive shorts outstanding in the paper markets that can never be settled in physical. Remember, this is really only a paper market and was never meant for delivery. And now the market realizes there are not enough metals for delivery anyway. So this is why many participants now and many observers are actually looking at COMEX potentially failing within the next few weeks or months. And that is a very high risk. Well, as we keep telling our clients, don't trade in paper gold, don't trade in paper silver, don't trade in ETFs. Buy physical gold, buy physical silver, and keep it outside of the banking system in safe vaults where you yourself have direct access to your metals. That is the only way to preserve wealth and hold your metals. Now, going over to silver, silver is the biggest problem market now in precious metals. And physical silver is traded on the LBMA in London by LBMA banks in London. And that is a physical market. But it's not a physical market anymore. There are over 2 billion ounces of silver claims. That is 2 years production, or more than 2 years production. And that silver just doesn't exist in physical form. So if these paper holders ask for delivery, which they will do, there will not be any physical silver to deliver. And this is why there's a high likelihood that also the LBMA market in London will fail. So I want to come back to the fact that you have to expect now, as an investor in gold and silver, you have to expect much higher volatility. I said years ago that silver is not for widows and orphans because it moves very fast, and if you can't take the heat in the kitchen, you should stay out. But at the same time, silver is an incredible opportunity to get real returns on real assets here in the form of physical silver, because we expect silver to move a lot faster than gold. We started buying gold in 2002 for our clients and for ourselves at $300. We actually bought bigger amounts already then because we saw this end of the monetary era already at that time.
According to Egon von Greyerz, what we're witnessing in gold and silver is the early phase of a multi-year monetary reset. He argues that corrections like the one we just saw are completely normal in fast-moving bull markets. When assets rise dramatically, volatility is inevitable. The mistake investors make is focusing on short-term price swings instead of the long-term structural shift underway. Egon points out that gold has recently bottomed against the S&P 500 and broken into what appears to be a multi-year uptrend. To him, this signals that real assets are beginning to outperform paper assets, a trend he expects could last 5 to 10 years or longer. His broader thesis is bold. We are entering a new monetary era. Fiat currencies are being debased at an accelerating rate. Sovereign debt markets face structural collapse. Interest rates could revisit levels seen in the 1970s. Banks will struggle, and parts of the financial system will be restructured. In this framework, gold and silver are not going up. Currencies are losing purchasing power. Egon emphasizes that investors should stop measuring wealth in dollars or euros. Instead, measure your wealth in ounces of gold and silver. Paper money can be created infinitely. Physical metals cannot. He is highly critical of the paper pricing system. According to him, COMEX and the LBMA operate largely as paper markets, with massive leverage and far more claims than available physical metal. In silver especially, he argues that billions of ounces in paper claims exist, representing multiple years of global production. If a meaningful number of investors demand physical delivery, the exchanges could face severe stress. This is where the phrase comes in. One day there will be no offer, only a bid. In market terms, buyers may be willing to pay, but no one will be willing to sell physical metal at quoted prices. Egon believes silver will likely outperform gold due to its smaller market and tighter supply. He has previously suggested that gold could reach $10,000 or higher in a currency debasement cycle. If the gold-silver ratio compresses toward historic norms like 15 to 1 or even 10 to 1, silver's upside could be dramatic. But he stresses this is not about speculation. It's about wealth preservation. His advice: own physical gold and silver. Keep it outside the banking system. Expect volatility. Think generationally, not quarterly.
And at the time I said that I expect gold to move to at least $10,000. It's not a firm target. It's just a round number that it is likely that gold would reach. So we're only just halfway there now, but we can move the next $5,000 very, very quickly. And if you take $10,000 gold, which is not the ultimate target in my view. We're going to move a lot higher because we're measuring it in paper money, and paper money is going to collapse much faster now at an exponential rate. But anyway, if we use $10,000 for gold, then let's say that silver goes to historical ratio gold-silver of about 15. $10,000 divided by 15, that is $666 for silver. That is a minimum, and I think we'll reach a lot higher than that. The ratio could easily go to 10, for example, and you take $10,000 divided by 10, you get $1,000. But it's not the point here that you're speculating to make money on gold and silver. And this is, as I said, really not real money, because a lot of it is inflationary money because the currencies are going down so fast. So you're holding gold and silver to protect yourself, your family, and to protect generational wealth against the end of a monetary era and the destruction of paper assets, and obviously including money. Don't hold any money in the bank. The banks probably won't survive, and the paper money will not survive either. So don't be afraid of buying more gold and silver here. You've got a fantastic opportunity, especially in silver, because it has had a bigger correction. So buy here, buy as much as you can afford, both gold and silver. Gold is the king of metals, but silver represents a fantastic opportunity. So for anyone who hasn't bought enough at this point, this is the time to buy, not be worried about the correction. Corrections gives you an opportunity which is unique right now, and therefore take advantage of that. As Mr. Gold, James Sinclair, said a few years ago, he said, there will be a day when both gold and silver will go no offer. That means no one will offer you a price for gold and silver because there's such a shortage and you just can't get hold of it. So there's a bid, which means people want to buy it at a price, and there's no offer because there just isn't any physical silver or gold available. So in summary, the correction is just a normal correction, just an opportunity to increase your share of gold and silver if you haven't bought enough already. And then just don't worry about it. We will have many more volatile corrections, but I think the next move, when this correction is finished, is going to be a very big move again for the next few months before it stops for a while again. But this is a multi-year view, which will, as I said, go to multiples of the current price.
According to Egon von Greyerz, this correction isn't the end of the move. It's part of a much larger transition. Volatility will increase. Fear will rise. But so will opportunity. Because if physical shortages materialize, there may come a time when gold and silver simply aren't offered for sale. And when that happens, there will be only a bid.